Welcome to Breaking News to Trading Moves. We're getting right to the news driving the AI sector this week. The headline on everyone's screen is this: Nvidia is reportedly in advanced talks to acquire the Israeli AI startup, AI21 Labs.
Yeah, and the potential price tag is somewhere between $2 and $3 billion.
A pretty big number.
It is. And for anyone watching the AI space, this is a clear signal. The market sees this as Nvidia pushing further up the AI stack.
So moving beyond just the hardware.
Exactly. They seem to be aiming to control more of the entire AI vertical, not just the GPUs they're famous for.
So for you, our listener, what we're going to do here is look at the details of these talks. And more to the point, we'll identify the types of companies that could win and those that might lose out if this deal goes through.
Let's start with the company they're targeting.
AI21 Labs.
Right.
They're an Israeli AI startup, and their last valuation was around $1.4 billion. That was during a funding round in 2023.
And it's key to remember who was in that round.
Both Nvidia and Google were investors.
Correct. So when a company like Nvidia, which is, it's a silicon and infrastructure giant, looks at spending billions on a software and model company, the motivation isn't simple.
It's not just about adding a feature.
No, not at all. It's about getting your hands on established foundation models, enterprise-ready AI products, and this is maybe the most critical piece, acquiring top-tier AI talent.
The talent part is absolutely central right now. AI21 Labs has, around 200 AI professionals?
That's the number. And bringing that team in-house, well, you're not just buying code, you're buying speed, acceleration.
It cuts down the time to market for whatever new offerings they have planned. A shortcut to scaling up.
And it fits perfectly with their bigger picture for the region. We know from Reuters reporting that Nvidia is already growing its presence in Israel in a big way.
They have plans for a major R&D campus near Haifa, right?
That's the one. The projections are for it to house up to 10,000 employees.
10,000. That's a huge commitment.
It is. And look at the timeline. Construction starts in 2027, with a target opening in 2031. This shows a long-term conviction that AI demand is just going to keep growing for the next decade.
So grabbing a talent pool like AI21 Labs now helps them staff up for that future.
It makes executing that long-term plan much more secure.
Okay, so the market has always seen Nvidia as the leader in AI compute. They're the picks and shovels provider for the whole industry. What does it mean when they suddenly decide to bolt on a large language model company to that stack?
It means they're moving from being a supplier to being a platform architect. The goal is to strengthen their full-stack pitch.
So you're not just buying a chip anymore.
No, you're buying an integrated solution. You get the compute, you get the CEDA software environment, and you get the optimized models to run on it.
That creates a lot of customer stickiness.
A ton of it. Switching costs go way up, and that gives Nvidia more pricing power across the board. They start setting the terms for the whole vertical.
But doesn't this create a potential problem? A lot of their big customers are also developing their own LLMs on Nvidia hardware.
That is a main risk everyone is watching.
It kind of turns Nvidia into a direct competitor to its own partners.
It does. And it forces those partners to rethink their reliance on a single provider. Now, they can't just switch away from the hardware overnight, but this might push them to invest more in their own internal silicon or open source models just as a hedge.
A hedge against becoming too dependent.
Exactly. But in the short term, that integrated offering is a powerful advantage for driving sales.
Okay, let's switch gears to the market reaction. Who benefits here? We can start with the most direct group, the Nvidia AI platform and core compute stack.
Right. The logic here is pretty simple. The more Nvidia can sell a complete AI solution, the more demand there is for their core infrastructure.
More services and models drive more hardware sales.
It reinforces the whole ecosystem.
So the two obvious names here are, first, Nvidia itself, ticker NVDA, and its manufacturing partner, Taiwan Semiconductor Manufacturing, or TSM.
Yes, and with TSM, it's not just about more chips, it's about more complex chips. As Nvidia bundles more into their processors, they need the most advanced manufacturing technology available.
And TSM is really the only one who can do that at scale.
They are. So a move like this just solidifies TSM's role as the key supplier for the whole AI economy.
Okay, second category of potential winners: AI server and data center build-out beneficiaries.
This is about capital spending. A stronger roadmap from Nvidia gives other companies confidence to keep spending on data centers.
It keeps the build-out cycle going?
It accelerates it. specifically for AI-optimized servers, high-density racks, all the physical hardware needed to house these systems.
The companies building that physical infrastructure, we're talking about Supermicro Computer, ticker SMCI,
Yep.
Dell Technologies, DELL, and Hewlett-Packard Enterprise, HP.
Those are the key players. They benefit directly from every dollar spent on data centers.
All right, and our third winner category, data center networking and memory read-through. The plumbing, so to speak.
It's a downstream effect. If you're deploying huge, complex models, the amount of data moving around inside the data center just explodes.
So you need faster networking, more memory.
You need more of everything that moves data. High-speed networking, high-bandwidth memory. Demand for all that plumbing stays elevated.
So here we're looking at Arista Networks, ticker ANET, for their high-speed switches.
Correct.
Broadcom, ticker AVGO, for networking components. And the memory company, Micron Technology, ticker MU.
All three are positioned to benefit.
Okay, now let's flip it around and look at the categories that might face some pressure from this.
Yeah.
Let's start with the hardware competitors.
So competing AI accelerator and CPU vendors, their big challenge has always been the CUDA software moat.
The proprietary software that locks you into NVIDIA's hardware.
Exactly. Now, imagine a world where NVIDIA adds proprietary models on top of that. The integrated platform becomes very, very hard to compete with.
Because enterprise customers might prefer the all-in-one solution.
Many will. They'll choose that simplicity and pre-optimized performance over trying to piece together a rival chip with a third-party model. It just makes winning those customer deals that much harder.
So this puts the most pressure on advanced micro devices, ticker AMD, and Intel, ticker INTC. For them, the bar to compete in AI just got raised.
It moved higher up the value chain.
Next up, the software side of things. Smaller public AI software names.
The worry here is bundling. It's a classic tech competition strategy. As Nvidia and the other big cloud providers build more AI features into their core platforms,
It gets tougher for the little guys.
it does. It gets much harder for standalone AI software vendors. If a customer can get a good enough feature bundled for free with their existing cloud subscription, why would they pay for a separate tool?
It hurts their pricing power and makes it hard to stand out.
Unless they have a very, very specific niche, it's a real headwind.
So we're talking about companies like C3.ai, ticker AI, SoundHound AI, ticker SOUN, and BigBear.ai Holdings, BBAI.
Those are some examples of companies that could feel that bundling pressure.
And for our last category, let's talk about the biggest players, the hyperscalers and big AI platforms. This one feels a little less intuitive since they're NVIDIA's biggest customers.
It's all about negotiation dynamics and strategic control. When Nvidia moves up the stack like this, it shifts the balance of power a little.
How so?
The hyperscalers who want to own the entire customer relationship become even more dependent on one single outside vendor for a core piece of their technology, and that makes them uncomfortable.
So this pushes them to invest more in their own alternatives.
It absolutely does. It accelerates their spending on in-house solutions, whether that's custom chips like Google's TPUs and Amazon's Trainium or building their own models. It costs a fortune and has risk, but they feel they have to do it to maintain some leverage.
And that group includes Microsoft, ticker MSFT, Amazon, AMZN, and Alphabet, GOOGL.
That's the cohort. So if we pull it all together, the main takeaway from this news is that it's more than just a big transaction. It really signals NVIDIA's intention to move from being just a hardware supplier to becoming the platform owner that sets the rules for the AI ecosystem.
So as this story continues to unfold, there are a few things you should be watching. First, does the deal actually move from reported talks to a signed announcement? That would confirm its strategic importance.
Right.
Second, look at the final details. The price, whether it's cash or stock, and what kind of retention packages they put in place for that AI talent.
That's key.
And finally, and this is the long-term one, watch how the big customers react. Do the hyperscalers lean into NVIDIA's integrated system? Or do they see this as a threat and double down on building their own internal stacks?
That's the big question.
This discussion reflects the opinion of the author and is not financial advice or a recommendation to buy or sell any security.